So you have this nice window into the ultra high net worth individuals. What's their biggest question right now?
Well, it's interesting because we've been advising our clients to go global, build globally diverse portfolios, and yet what we're seeing with U.S. investors is a huge home bias. So a lot of their investments are still U.S.-centric, and in addition to that, still a very high level of cash. So post the financial crisis, they had roughly 25% of their assets in cash. Fast forward to today, it's still 22%, so very, very high level. And as a point of context, if I was an investor and I sold at the peak of the market before the market crashed and sat in cash, every single asset class would have outperformed by a large margin. So more of the reason to put the money to work and to diversify further geographically as well.
Do you have a feeling as to why? I mean, 25% in cash was very surprising to me that it was that much. Do you feel like they're waiting? They just don't have the right opportunity? They think they're correctly invested? What's your read on that?
Well, so those have waited in the sideline haven't done nearly as well. So when you look at clients who went with our proposed asset allocations, they on average did 200 to 300 basis points better per annum than those that didn't follow our asset allocation guidelines. So when we talk to them about diversifying, more geographical diversification, one of the areas that we've been speaking to them about is investing in China. China is driving and leading the way in innovation in technology, virtual reality, robotics, AI, and we think there's a huge opportunity for long-term upside in China. In fact, we took 100 of our clients to Shanghai last fall, and they heard firsthand about all of the exciting innovation developments that are happening in Asia and in China, and those clients represented $50 billion of net worth. $50 billion, and they were very interested in the Asia story and the China story in particular.
So Ida, I have to ask you, given that, and given what we're seeing in the world right now, especially as it relates to China, as it relates to tariffs and trade and whatnot, what are those clients saying now that may be different in terms of worrying about, that overseas exposure?
Well, we are obviously monitoring very closely what is happening with the tariffs. It's $34 billion on China today, could go up to plus $200 billion by the end of the summer, maybe more. So absolutely monitoring that. But despite all that noise around the tariffs and everything else, there is a very strong fundamental reason to invest in China. So above and beyond everything I just mentioned, the innovation, technology, forefront of innovation, China also has a very, very large middle class and emerging middle class of 400 million people. That 400 million people, those individuals will be driving consumption in Asia and in the region in the near term and in the long term. Not to mention that the Chinese have a 6-time savings rate compared to the U.S., so a lot larger. I was having a client conversation last week, and the client said to me, I have exposure to China. I'm invested in the MSCI. But what they realize is, wait a second, China and Hong Kong only comprise 3.5% of the MSCI, where on a global market cap basis it should be closer to 17%. So again, a lot more room for increased growth there.
Alternatives. I saw on your chart there, still fairly heavily weighted toward hedge funds at a time of relative, shall we say, existential crisis in the hedge fund world. What are clients saying about that, and what are you telling them about hedge funds specifically? So
what we're telling them is that we need to build globally and diverse across asset class portfolios for our clients that will withstand risks. Okay, so the whole goal is to make sure you have a very solid portfolio that are withstanding geopolitical risks, other types of risks that could happen in the future. And alternatives are a very important part of that. Private equity, real estate, alternatives. I mean, we've vet 100+ different ideas in the private equity and co-investment space, for example, and we end up with 6 to 8 that our clients invest in every year, right, depending on themes that we're seeing, technology, geographies, etc.
As we wrap this up, is there one worry that everyone seems to have right now?
Well, that is, how do I invest my money? And I reiterate to everyone that we've got to go global, we've got to put the cash to work, and we have to stay invested.